Let us see. So, good evening, people. This is Veena here. I'll just share my screen. Yeah. So, I hope you all can see that. Okay. Yeah. So I'm Veena here. I have been teaching in a local college here since almost 11 years. I've been teaching accounting, but then I have loads of experience teaching generally accounting back home as well. I'm from India and have been teaching there as well. I've got a master's in finance and I'm a part qualified CIMA. Waiting to finish my CIMA, just a few more modules to go. But I'm just waiting for a few more things, and then I'm hoping to complete my CIMA in a few maybe months or maybe in a year. I'm hoping to finish. I've been teaching AAT level 4, all the levels I've been teaching. So this is the first time, honestly speaking, I'm doing on a social media platform as such. I hope you all like it and I hope you really make use of the session. I am recording the session and I'm hoping to upload it on YouTube as well. So let's see how it goes. Please apologize if something is unclear or just put it on the chat box so that then I know if there is any issue as such. Thank you so much. Okay, let's begin then. So today I'm going to do the business tax and the topic is going to be adjusted trading profits. Uh, so we all know that those who are doing business tax, they all know they are all probably in level 4, and there are two taxation modules. One is the business tax and the other one is a personal tax module. And I'm also assuming that people who are here today, they have a background of what business tax is. So I will not go too much into the details of what business tax is. Straight away I'll go to the topic and then we will take it from there. So I will be doing the FA24, which the AAT will be testing up until January 2026. So anybody who is sitting the exam in the next whatever 7 months, 4 months, 5 months, it will be handy for them. So let's see how to do this particular topic, which is called adjusted trading profit. So it is, as the word says, it is business tax. It is more valid for businesses, not people individually. So it is more for businesses. So what are we covering today? So we are going to cover these fundamentals of what things are and then followed by one example. I will be showing you one example how to do things. Okay. So learn to identify what are deductible and non-deductible expenses and adjust accounting profits and losses for tax purposes. So we'll start with very simple things. So you all know, those who are here, you all know that how do we come to the profit? How do we get the profit in the first place? So you all are aware that the starting point is the ledgers. Then the ledgers move to the trial balance. The trial balance then is translated into statement of financial accounts. So the profit and loss and the financial statements are prepared. So that gives us the final profit. And that is required to pay. We all say that is what is the statement of financial position, which needs to be registered with the company's house. That is what we learn. We make adjustments, all the depreciation, we make adjustments for bad debts, we make adjustments for year-end adjustments like accruals, prepayments, all of that we do. And then we arrive at the statement of, then we arrive at the gross profit, then the net profit, and then that gets transferred to the statement of financial position, and that is registered with the company's house. However, that is not the case with the tax. Okay, so the taxation is completely different. So we don't, so what the profit figure that we see, it has got lot of things which the taxman, HMRC, is not going to allow. The taxman is going to say there are so many irrelevant things which you have included within the profit and loss. So that does not make sense. So get rid of everything which is not relevant to the business. We are not going to give you any tax exemptions. So I don't want you to show me so and so depreciation, so many expenses which HMRC is not going to consider. So what we have to do is we have to change those profit numbers. Okay, we have to change those profit figures. So what we have to do is we have to change we have to make some adjustments to the profit figures that we calculate and then change the numbers accordingly. So what is it that we need to understand? So there are some expenses and some incomes which are classed as disallowed expenses. Okay, so basically what we do is we do incomes minus expenses, correct? So within the expenses, we include so many expenses like depreciation, we include rent, we include interest, we include so many other expenses which may or may not be relevant to the business. Okay. So the HMRC says, well, they are not relevant to the business. Okay. So what we have to do is, so these are the costs that are not allowed as a deduction in arriving at the profit figure for tax purposes. Okay, the objective of adjusting the financial accounts is to make sure that only the income that is credited is trading income. So when you calculate the tax figure, only the trading incomes and only the trading expenses are taken into account and nothing else. That is the primary objective of this particular task that we are going to learn. Okay, so the only expenditure that is deducted is allowable trading expenditure. Okay, so this is what we have to understand. What is the whole objective of this particular topic is we don't include anything which is not non-trading. Okay, we don't want to include those. We want to get rid of those, but we can't just get rid of them. Means we can't just remove them from the account and get rid of it. No, we cannot do that. There has to be a statement, that is a statement that is prepared, and that is how we need to show in detail. Okay, so when we adjust, how do we do that then? So when we adjust the profits, we start with the profit from the financial accounts and deduct any income that is a non-trading income. Okay, and add back expenditure that has already been deducted, that is not allowable. Okay, so let me just, okay, so what happens is my pen, one second. Okay, so if you think about it, if I were to write on my slide here, the way we do things are, so we do, let us say we have a sales, then we have less expenses, sorry, cost of goods sold, then we get the gross profit, then we take away all our expenses, isn't it? So we take away all the expenses. We take away all the expenses. So if I don't want that expenditure to be taken away, what do? I add it back. Okay. So you do the opposite of what you had done before so that I don't include that. Because accounting does not understand the language of minus plus, it understands the language of debit and credit. We all know that very well by now. Okay, so here what we do is we have deducted or we have debited all the expenses from all our incomes. So what I want to do is so these expenses were originally subtracted, so you add them back. Same with your incomes. Imagine there is a rent. So what I would have done originally is I would have added any rent or any other income. But if it is non-trading, I need to deduct that. Okay. So now what we will see is there are so many things, there are so many examples that we are going to see, and that will help us to understand. So what is the general rule? The general rule is expenditure is allowed if it is incurred wholly and exclusively for the purposes of the trade. There is so business tax, again, those who are just starting it, or those who have already started it, or those who are in the middle of it, or resitting, whatever is the reason, you all might be aware, just like your taxation exam, TPFB, or indirect tax if you have done before, just like you have the reference guide, on the side of the side, this tax module also has got a reference guide. So there is a lot of information on in your reference material. Almost everything is there, but I will not say everything. There are a lot of things that you still have to remember. Okay. So the best option for you guys is always what you should be doing is having a read on the reference guide whenever you are doing a topic. This is what I advise my students in my college as well. What I advise my students is always have your reference guide handy, and see when you are going through the textbook, whichever textbook you refer to, when you are doing the questions, when you're reading through the textbook, always refer back to the reference guide. What material is given on the reference guide, what extent, what is the depth of the information given on the reference guide. If something is not given on the reference guide, please mention it either as a note or as a highlighter, or as whatever, however you find it okay. Just make a note of not there on the reference guide. So you need to know that you need to go over that. Okay. So that is what is an exam tip from my side, or a preparation, exam preparation tip from my side. Always do that. Now, so I said anything which is non-trading needs to be added back. Anything non-trading income needs to be subtracted. So what is non-trading? Let us see. Okay. So what is disallowed expenditure? I'm going to explain each of these, and then we will solve one question, so that then you get an idea. Okay. So what is a disallowable expenditure? So let me just again slideshow from the current slide. Yeah. What is a disallowable expenditure? So what is expenditures which are disallowed? Right. Now, if you see here, there is a allowable fine. This one is there on the reference guide. So you don't really have to learn them by heart. But by the time you prepare for your exam, you probably are ready with all of this. If not, never doubt, never always rely on the reference guide for these kind of things. Now, fines. So we include all sorts of expenses, because what happens is the companies think that, oh, I have spent it on the business. Let me just put it. Let me just put it on my as my expenses, as miscellaneous expenses, or as sundry expenses. I can just they keep putting them. They just keep adding them on their profit and loss. However, not everything is allowed. So what is allowed and what is disallowed, and what are we going to do with the disallowed expenditure? This is what we are going to learn. So I'm going to go over in detail one by one, and then we will see. So fines. So what is allowed and what is disallowed? Employee parking fines. So let us say your business, let us say you all work for a company, and you are sent on a work meeting, and if you park somewhere, and let us say you get a parking fine, and then you can claim it. Most of us think that, oh, it was my mistake, I should not be claiming it. However, if you are an employee, and obviously I don't know whether the employer would reimburse that amount to you, because they will say that, oh, it was your fault, you should not have parked there or whatever. But then if it is an employee parking fine, it is an allowed expenditure. So it can stay on the profit and loss. So what you have to remember is, because my students always used to get confused, what do you mean by allowed and what is disallowed? So when it is allowed, let it stay on the profit and loss. Do not touch it. If it is disallowed, move it, add or minus. So I am more worried about disallowed. I don't care about what is allowed. I only care about what is disallowed. So what is disallowed? So what is allowed? Let it stay there. Don't touch. Disallowable, add or minus, depending on whether it's an expenditure or whether it is an income. So fines, any other fines and penalties that you get. Employee, if it is an employee parking fine, it is allowed. Any other fines and penalties, like you have not followed some health and safety regulation, you have not followed some, there are so many rules that or let us say, you have not paid the VAT on time, the company has not paid VAT on time, the company has not paid the national insurance contributions on time. Those are all the fines and penalties which are disallowed, because that was a serious mistake on the part of the company. So that will be disallowed. So let it stay. So disallowed are the ones which need to be added back. So it was your mistake. So you added, so that is disallowed. Fraud. Petty theft by non-senior employees. Again, it is allowed. Okay. Whereas if the directors do some fraud, and because of which there is a lot of money which is lost, then it is disallowed. Okay. Donations to local charities are allowed. So donations to local charities. Now you may have seen when you drive across somewhere, when you drive to a different part of the city, or within the city, when you drive, you may come across one signal, or when the buses, you may see some buses or coaches where there is one advertisement or something, or local charity or whatever. So that is classed as donation to local charity is classed as like an advertisement. So let us say Labour Party, or let us say some, so that is a political donation. But donations to local charities, so like if it is locally, just particular to specific to where you live, so then donations to local charities is classed as an advertisement, and hence it is allowed. Whereas political donations, donations to national charities, they are disallowed. Okay. So you have to immediately check this. If it is disallowed, you add back. If it is allowable, leave it. Then in relation to non-current assets, so capital allowances are allowed. Okay. So capital allowances means if you have bought any asset. So in relation to the non-current asset, it is allowable, but it is classed as a capital allowance, guys. Okay. So that is different. And anyway, from level 2, what we have learned is when we buy an asset, we never put it on the profit and loss anyway, isn't it? It goes from the cash flow, but it never goes from the profit and loss. Then the next one is disallowable expenditure related to the non-current asset is depreciation and loss on sale. Now, why is depreciation classed as a disallowed expenditure? Depreciation is classed as kind of a non disallowable expenditure is because depreciation again is a what should I say, it's a notional loss in the value of an asset. It's not a literal loss in the value of the asset, it is a notional loss in the value of an asset which you charge. Also, the second reason is it is a non-cash expenditure. You don't really lose any money, there is no money sitting on the side. So that is why depreciation is also classed, it is a disallowed expenditure. Same with the loss on sale. It is not like a literal loss, but it is a notional loss. Okay. If I bought a property for 200,000 or 300,000, and if let us say I make a loss, I sell it at a cheaper price, or if I sell it at a if I sell it at a cheap lower price, it is not like a literal loss, because the money is not literally going out from my pocket, but it is a loss because of the fall in the value of the asset. So depreciation, loss on sale are classed as non-cash expenses, and I call them as also notional losses or notional expenses. That is why you add them back, because they are disallowed. Then the next one is repairs. What in repairs? So the what is allowable? If it is a revenue expenditure, so typically like repairs to some windows have broken or regular maintenance, all that is a revenue expenditure. So that is allowed. Repairs and redecoration is allowed. Then what is disallowed? So anything to do with a capital expenditure. So if you have bought something and you have bought like an asset, and you had to repair that, you know that you have learned this multiple times in level 3, in level 2, in level 4. If you have done the DAIF module already, you all know that when you buy an asset, and if you spend money on that to make it usable, it is not classed as a revenue expenditure, it is classed as a capital expenditure. We all know that, and hence that is the reason that is disallowed. Improvements made to the asset is also disallowed. Work required on a newly purchased asset to make it fit for use. So similar to the capital expenditure. So if you buy anything, if you buy an asset, disallowed. If you improve an asset, disallowed. If you spend something on a purchased asset to make it fit for use, that is also classed as disallowed, because they are all classed as capital expenses. Next one is legal expenses. So legal expenses relate to revenue matters. Okay, so they relate to revenue matters, debt collection, employee contracts. So legal expenses, if they relate to the revenue matters like debt collection, employee contracts, they are allowed. If let us say an employer has sued or has sacked the employee or has fired an employee, and that employee has gone and sued that employer. So if there are legal expenses spent on that because it's related to the employee contract, then that is classed as an allowable expenditure. Then what is disallowed? If it relates to capital matters, but there are some exceptions. And then if the legal expenses are related to breaking the law. So obviously, if you're breaking the law, it is disallowed. And if it relates to capital matter, like buying a land, buying a property, and if the legal expenses are related to that. So anything to do with the capital asset basically is classed as a disallowed expenditure. Irrecoverable debt. Okay. So if it is like a trade debt, a day-to-day bad debt or a trade debt, then it is allowed. There is some more details of these, what is this called? Irrecoverable debt. I don't think we can cover the whole thing. There are just a few things which are in irrecoverable debt needs to be mentioned as well. So trade debts are allowed, non-trade debts are not allowed. Okay. Um, Non-trade debts could be like, giving a loan to somebody or those sort of things are not allowed. Interest payable on trading loans is allowable. On non-trading loans is not allowed. So on trading loans is like during the course of the business, if there is a loan that has been given, has been taken and you have to pay the interest on that, that is allowed, like a bank loan or those sort of things, and you're paying interest on that is allowed. However, on non-trading loans, then it is not allowed. So in your exam, they mention specifically whether it is a trading loan or whether it is a non-trading loan, or they tell you used for business purposes, not used for business purposes. Based on that, we have to decide whether it's a trading loan or a non-trading loan. Then the next one is entertaining expenses. So again, this was touched on, if you remember, it was only the VAT element of entertaining expenses, which was done in level 3. Now here, see, similar thing again, if you look at it, the entertaining expenses, if you have spent that money on your staff, is allowed. Same thing we had done in level 3, where the VAT on the entertainment expenses spent on the staff was allowed. Okay. Then what is disallowed? Customers and suppliers entertaining expenses are disallowed. Then gift. So gifts, what is about the gifts? So to the employees, um, other gifts provided, conditions satisfied. Again, this one is there on the reference guide, what is allowed and what is disallowed, because to the employees, and there is a condition for the gift. Okay. And thankfully, like I said, once you understand what to do with these, then this comes up as a standalone question in your exam. So knowing this really will help. Okay. And all other gifts are disallowed. So thankfully, what happens is when you look at the question, all you have to know is what am I doing with the disallowed expenditure? And then if you get questions on that, if you get doubts, you can always refer to the reference guide to see whether that is allowed or disallowed, and then act accordingly. The next one is a car leasing cost. So sometimes what happens is the cars are taken on lease or bought on lease. So what happens then? So the CO2 emissions. So when is it allowed? CO2 emissions of 50 gram per kilometer or less. Okay, only. So basically, if you think about it, the less the carbon to emission, less is harmful to the environment. Okay, so if you think about it, all that we talk about climate control and we talk about sustainability, we talk about all of that. So you think about, okay, what is the government doing? Oh, yes, we give tax exemptions for cars which are less than 50, whatever, that CO2 emission of less than 50 gram. So that is a initiative that the government is taking, isn't it? So I give you tax exemption if you buy a electric car. That is why many companies also give you, as a salary sacrifice, they give uh, electric cars or some cars which are hybrid and those sort of things. And then what are disallowed? Other cars are disallowed. Disallow 15% of the leasing cost. What does that mean then? If 15% are disallowed, 85% are allowed. That is what it means. So you have to be very careful about that. When they give you the lease cost, you have to calculate accordingly. Dividends paid, there is no question of allowable expenditure because it is not classed as an expenditure as such. Okay, those who have studied DAIF, they will know dividends is not classed as an expenditure in the first place, and it is disallowable because it is also called as appropriation of profit. Okay, so these are all your expenses which are disallowed. Now we looked at the expenses. Now we are going to look at the incomes. Now what are the different, see, incomes that we usually don't have many. We usually have sales, but that is a trading income. But income, there could be some other incomes which can be taxed in a different manner or in a different way. Like I said, rent. Rent is taxed under the head that property income. So rent does not come under the trading income. That is why it is disallowed. Non-trade interest, just like the non-trade expenditure was disallowed, non-trade interest received is also disallowed. Then exempt income, dividends received, profit on sale of non, just like loss on sale was not allowed, profit on sale is also disallowed, and dividends received is an exempt income. Okay, it is classed under a different category, it comes under a different category. Okay, so this is the format of how we start with the how to do it, how to start with the question in the first place. Okay, so whenever you start, whenever you do a question, I know that, see, thankfully AIT has got the layout. But when you are practicing yourself, many people, especially, see, once you understand this topic, it is quite a straightforward one. But till you get it, what students don't get it is, what do I do? The layout of the questions is very funny because Osborne will show it in a different way, Kaplan will show it in a different way, BPP will show it in a different way. Everyone shows, they are all the same, they are all telling you the same things, but then they are laid out differently. So what is it that you need to understand? You need to understand that my starting point is the net profit as per the accounts that is given to you. That is my starting point. Okay. So then you add back all the disallowed expenditure. You take away all the incomes which have been included, but they should not be there for tax purposes. You take away all of that, and then that gives you the adjusted trading profit before capital allowances. Okay. Why is it called before capital allowances? Because there is something called as capital allowances as well. I will cover that as well on one of the lessons. That needs more time to be taught. So I will do a capital allowances session as well. Adjusted trading profit before capital allowances, and that is that so we get the adjusted trading profit, and then based on this, based on all that, the end figure, you are taxed on that. Okay, so the company's profits are taxed on the basis of that, not on the basis of what you see on the statement of financial position. So this is the end of my PowerPoint. Now I'm going to show you the question. Okay, so I will share with you a question. Okay, let me share the screen. Let me know if I'm sharing the right screen, guys. Okay, because is this getting shared? Somebody unmute yourself and can you tell me if I'm sharing
Nothing
the
at the
Excel
moment.
screen?
All I can still see is your slideshow at the moment.
Okay, so still the slideshow, yeah?
Yeah.
Okay. Now, this is one of the questions that we can do together. Okay, guys. So now this is a question that I have just 1 second, please. Just I'm just opening a document on my phone. Just give me 1 second. Right. So what are we doing here now? So based on the knowledge that we have just learned, guys, so I have a sample question here, which shows salaries, as you see, legal charges, there is a note there, impaired debts, there is a note. Impaired is basically a bad debt. Depreciation, of which is on factory and machine. Then there is a repairs, there is a note. Then sundry expenses, which are allowable expenses. Net profit figure is given to me because there is a gross trading profit here. So imagine this is like a double debit and credit. This is my credit showing gross trading profit, and then all your expenses are here showing me the net profit of 738,101. Now, these are my notes which have been given. Now, how do you do this question? So, like I said, my starting point is always net profit as per accounts. Okay, so I will start doing that. And then after that, what we are going to do is we are going to check whether each and everything is allowable, non-allowable, or disallowable. And that is how we are going to decide, do I need to add it back or is there no requirement? Okay. So what I'm going to do is we will see step by step, is it allowed or is it not allowed? Okay. So if I go to salaries, wages, salaries and wages are paid to the employees. Surely it is allowed. Okay. Then, so this is how I'm going, we are, every time when you do a question, this is how you would be checking. Allowed, 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 disallowed, disallowed. If it is disallowed, add back. If it is allowed, leave it. So, salaries, wages, allowed, don't touch. Legal charges, there is a note, we will check. Impaired debts, there is a note, we will check. Depreciation, never allowed. So, I have to add these two back. Then repairs, again, there is a note. Sundry expenses in the bracket, they have said it is already allowable. So don't touch. So then what about all these things that we are going? And then refer back to the PowerPoint or your notes if you require. Okay. So debt collection. So I don't know if you remember, legal charges related to the debt collection. Debt collection is related to your trade, isn't it? So it is an allowed expenditure. Staff service agreements. Now again, staff service agreement is related to employee contract agreements, if you remember. So that is why that is also allowed. In connection with lease of new office premises. What is new office premise? New office premise is a capital expenditure, which is not allowed. So 1,000 so is disallowed. So what I'm going to do is I'm just going to make a note of this, and then we will start adding them as required. Okay. So I'm just going to write disallowed. So this is disallowed. Okay. So I'm going to add it back. So remember to add this number back. So I'll put a star here so that we know that we have to add it. Then the next one is, sorry, it multiplied automatically, is it? No, that's fine. Yeah, I think it has done a times there. Okay. Then the next one is impaired debts, loan to former employee written off. Okay. When you have, it was a former employee. Okay. So you have, so it is a non-trading loan, isn't it? So that cannot be allowed. So this is disallowed. So we need to add it back. Then increase in the provision for bad debts, impaired debts. So there is something called as general provision and there is something called as a specific provision, which you have learned before. If it is a specific provision, it is allowed. If it is a general provision, it is not allowed. But here they have not told us. So it is just for impaired debts. So that is classed, this we can leave it. It is classed as a allowed expenditure. This is disallowed. Now come to repairs. Now repairs is related to what? Repainting. Repainting is allowed, isn't it? Because it's classed as a decoration. New office furniture is disallowed. So we can't allow that. So what I'm going to do now is I'm going to just take net profits as per accounts. We'll start with that figure. Net profit as per the accounts is this. So I'm just going to copy that figure, equals net profit. So I copy that figure and then I add all the disallowed expenses. Add disallowed expenses. I will list one by one below. Okay. So legal, sorry, legal charges for new office. So that is disallowed. So I'm going to put 1,000 pounds here. Next one, whatever we said disallowed. We said loan to former employee written off is disallowed. So I have to write that now. So I can just copy this. That is not allowed. So we put 200 there. Then new office furniture. We can't take that into account. This one we cannot take. Repairs to new office furniture. That is 7,600 disallowed. We still have to go up and then, so we just took all these into account. You could also, what you can do is you can go step by step from here. Salaries, wages allowed, legal charges not allowed. So go back on the notes and take that into account. Impaired debts, take the note into account and put that. And then depreciation, both we can't take. So depreciation is going to be 30,000, which I'm going to take. Which is going to be 30,000, which is not allowed. So my adjusted trading profit is going to be equals, I'm just going to add all of this. So the answer is 776,901. This is going to be my adjusted trading profit. Yeah. So are we, yeah, this is pretty much the session that I had planned for. Is there anything else you want me to help you with, or is there anything you want me to explain so that then I can explain? Any doubts, any questions? More than happy to take them now.
I'll just double check with people in the chat.
Yeah.